Have you been wondering how to take out a crypto loan on Tezos? Well, now you can, and let me tell you how. Yupana is the first open source and non-custodial lending protocol on Tezos. In this video, you will learn how to borrow crypto assets, how to avoid liquidation, how to pay back the loan, how to withdraw deposited collateral. Firstly, open Yupana Finance and sync your Tezos wallet. Yupana is an over-collateralized lending protocol. This means you need to supply supported assets that can be used as collateral before borrowing. You can find a more detailed explanation of how Yupana works in our documentation. The link is in the description. The collateral factor limits the size of your loan. For example, if you supply 100 Tez and the current collateral factor is 50%, you can borrow at most 50 Tez worth of other assets at any time. Let's deposit collateral. In the Supply Assets chart, we choose from our available assets. Click on the Supply button. Yupana shows us the status bar of the asset available for depositing. You can check how the borrow limit will change after depositing. Then set the amount of the asset you wish to supply. Click on Supply and confirm the transaction. Yupana will transfer the funds to the smart contract. You will receive Y tokens, which represent your share in the pool. We explained lending and earning on Yupana in our other video tutorial. The link is in the description. Now let's check the user's dashboard. The Your Borrow limit has increased. Finally, we are ready to take out a loan. Your supply balance is the overall value of your deposits. Your borrow balance is the value of the borrowed assets. Net APY is the ratio of supplies and borrows APYs. In addition, you can check your borrowing limit. It is the maximum value of the loan you are eligible for. The liquidation limit is the credit limit after which any user can liquidate your position. On the Your Supply Assets chart, you can see your active deposits. To take out a loan, you have to set supplied assets as collateral. To do that, you can switch the toggle button. Thus, lenders and borrowers can seamlessly assume both roles. Borrowing happens in the Borrow Assets chart. Borrowers pay interest on the loans. You can check the interest percentage in the Borrow APY column. The interest rate of the loan depends on the specific asset. It is determined by the ratio of supply and demand for the asset. Choose the asset you want to borrow. We'll choose KUSD. Click on the Borrow button. Then set the amount that is available to you. The maximum borrowing amount is calculated from the collateral size, collateral factor, and available liquidity in the pool. Yupana calculates your borrow limit for you to avoid liquidation. We'll explain liquidation later in this video. After you set the amounts, click Borrow and confirm the transaction. The funds will go to your wallet. Okay, now let's explain liquidation. The liquidation process occurs when another user repays part of the outstanding amount of your loan and thus purchases your collateral at a discount. We covered this topic in our documentation. The link is in the description. Loans have no time limit, but rising interest rates and exchange rate volatility may change your supply-debt ratio. As a result, your liquidation limit may deteriorate, leading to eventual liquidation. To avoid the liquidation of your collateral, pay attention to your liquidation limit. Try to keep that number below 80%. To increase it, you can partially repay the loan or replenish more assets as your collateral. Once you are ready to repay the loan, you return the borrowed asset and you can then withdraw anything you have supplied, bringing us full circle. To repay the loan, open the Your Borrowed Assets tab and click on the Repay button. Now, you can set your available amount of assets. Pay attention to how your borrow limit is changing. Decide how much you'll pay and click on Repay, then confirm the transaction. The last step is withdrawing the collateral. This happens in the Your Supply Assets section. The deposit can be withdrawn at any time unless it's already serving as collateral. Also, the user cannot withdraw his deposit if there are insufficient funds on the smart contract. This happens when other users borrow assets. Click on the Withdraw button. Set the available amount of the asset. Withdrawing collateral affects your borrowing limit. Click on Withdraw, then confirm the transaction. Congratulations, you've just had a taste of a bankless future. More information on how the platform works under the hood can be found in our documentation. If you still have questions or would like to make a suggestion, talk to us via our official channels.